Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I am with you with the area of AFB. Am I audible as well as visible? Good morning. Shall we proceed? Okay. So, if you haven't downloaded our app yet, you can use the code Y541 and get any of our JAIIB or CAIIB courses from our app. There, you get additional discount on the basis of the coins accumulated as well. On the app you'll find all the details regarding the examination. The it helps you to find out everything on just a click. So if you haven't downloaded the app yet, then kindly go ahead. Next, we if you haven't subscribed to our channel yet, kindly subscribe to our channel. You can go on to our channel and press the bell icon so that if in any case we are coming up something new, you get to know about it. So go ahead and check it out. Okay. Our JAIIB complete courses have started. At the same time, our video courses have also been launched. So if you haven't reviewed to our courses, then kindly go ahead. These are the live batches that have just started. One on September 12th, the other one just started on September 5th. They're the last selection batches that we are coming up. For the complete syllabus preparation. So if you haven't reviewed this, then kindly go ahead along with this. Even the video courses have also come up, so you can look forward to our video courses as well. The video courses, the complete classes of only the recorded classes is also there, so that if anybody would like to go ahead and buy the entire classes at once rather than going for the live classes, then you can definitely look forward towards that as well, so that if you're preparing, then it helps you, right? Okay, so let's begin with the class today, everyone. This is the first question for the day. When we talk about, oh, the answer is visible. When we talk about the debt equity ratio, what's about this ratio? Under debt equity ratio, it is called what exactly? The debt equity ratio is stated under the short term solvency, long term solvency, profitability, or none of the above. When we talk about the debt equity ratio, it is basically a form of long term solvency. Okay, let's talk about it. The short term solvency is linked with liquidity ratio. Whenever I ask you to give me money and you have the money in your pocket, that particular thing is called short term solvency. If I ask you after 10 years that pay me my money back and you have your money in your pocket, that's called long term solvency. When you have you want to study the profit amount, in terms of the profit, what's happening with the profit, that is called profitability ratio. And then we have none of the above. The debt equity ratio tells about what portion of debt we have in terms of our equity. So the correct answer would come out to be the long term solvency ratio. Second question. Second question says the cash and bank is 20,000, trade receivable is 2 lakh, inventory is 2 lakh 80,000, and current liabilities are included as creditor and bills payable. Then the working capital would be, is it 4 lakh, 3 lakh 80, 3 lakh 50, or 70? Excuse me. When we talk about the working capital is equal to CA minus CL. So in the examination, they can also just give you these things directly. You have to calculate it on your own. They can just give you a mix of the current assets and current liabilities all together, and you have to first identify the current assets and current liabilities and then do the question. So it's gonna be 20,000 current assets. Then we have 2 lakh as current assets. Then we have 2 lakh 80 as current assets. Then in terms of current liabilities, we have 1 lakh, and also we have 50,000. So the total here would come out to be uh, 3 lakh, 5 lakh. The total is 5 lakh for current assets and 1 lakh 50 for current liabilities. So if this comes out to be the total, the answer for this question would be, the answer for this question would be 3 lakh 50,000. Okay. Now moving on, the discount rate which forces net present value is equal to 0 is defined as positive rate of return, negative rate of return, in external rate of return, or the internal rate of return. So under discounting rate of return, when NPV is 0, which particular ratio are we talking, which particular discounting rate of return are we talking about? See, when the present value, when the NPV is equal to initial investment, the amount that you have invested is exactly equal to the net present value. This situation is called IRR, internal rate of return. Right? So when we talk about NPV, when NPV is positive, the particular project is accepted. When NPV is negative, that particular project is rejected. And when we talk about NPV is equal to 0, that means we are having internal rate of return. That means this project is having enough, whatever money we put, that money can be taken out. But there won't be anything positive, there won't be anything negative. Right? It's called internal rate of return. The next question. The PV factor of a maturity is 10,000, which have been 15% interest for 5 years, while required for rate for return is 10%. This question has a little trick. The question says the present value of the maturity value of 10,000. So basically, you are putting 10,000 today, and you need to first of all find out what would be its value 5 years after, and then you have to come back and find out its PV. The present value of the maturity value of 10,000. That means, first of all, take up this 10,000, then find out 1 plus 15% of this value. Whatever comes up is basically your future value. Once you know the future value, then divide that future value with 1.11. That means you will have to find out whatever the value would be here. You have to find the PVIFA, the present value factor of that particular thing, for 5 years at 10%. So this question has a trick in it. So what would be the answer here? This would be your step 1, this would be your step 2. Is it 12488.94, 12544.86, or 12474, or 12574? Under these kinds of questions, it is not required that the entire question will be exactly same. Okay. The answer here would be How do we calculate it? First of all, you'll take up this 10,000 as 1 plus 15% but raised to power 5. This was for the compounding interest. This was for CI. Once you have got that value after 5 years, after the compounding, whatever you will be left with, then take up this 20,113 and find the PVI FA for this, which is received after 5 years. Then you'll have to divide this 20,113.57 by 1 plus 10%, but raised to power 5. So either you can just take out 1 divided by 1.1 and find out its value for 5 years and multiply it, or you directly divide that particular amount. You'll also get the same values, right? So you can look forward to it. There are many formulas, but I believe you can go on with this one. This one's easier to look forward to. The second method says that if you are taking this value, then you can divide it directly and then multiply it with this. You can find out 1 divided by 1.1 raised to power 5 and then multiply it with 20,113. You can do all these things on your calculators. So make sure you have your own calculators. In one particular class, I'll let you know how to work upon this compounding and PV factors. For this, that is 1 plus 15% raised to power 5. What you can do, in your calculators, I'm writing all the steps that you can use in your calculator. Number 1, first of all, press 1 plus 15, then press percent, then press equal to. Whatever comes up would be 1.15. Then press on multiply. Then press equal to 4 times. You just have to press equal to 4 times and you'll get the answer. So this is for the calculation of 1.155 times. It's a trick that you can use. And then if you'll have to calculate it for 1 plus 10% 5 times, first of all, what you can do is use this particular method only. That means you can press 1 plus, then press 10 and then press percentage. Whatever you get is 1.10. Then you have to multiply and then you have to press equal to 4 times. You have to press equal to 1 time less than the value that is written here. If it is 5, you'll have to press equal to 4 times. If it's 4, then you have to press equal to 3 times. This is the particular method which is used for calculating the raised to powers without noting it down. Okay, now moving on to the next question. Okay, this person, Ray, wants to retire and receive 3,000 a month. He wants to pass this payment to his future generations after his death. He can earn an interest of 8% compounded annually. How much will he need to set aside to achieve his perpetuity goal? Perpetuity is basically you will receive this amount for a long period of time. So what would be the particular amount that he needs to keep aside if he wants to receive 3,000 every month? When we have to calculate this particular question, the answer is you will have to divide it. See, this is when we look forward to it, the rate of interest is 0.8 and you are receiving rupees 3,000 a month. Then what you can do is if you are taking a month here, then divide it by 8%, but on what basis? On the basis of per month. So if you divide the particular rate of interest which is for 12 months, what would be the value for 1 month? It would be 0.0067. So if you divide this by 3 lakh, that means at this point of time you will have to put up this amount. Under perpetuity, what it means is whatever amounts you want to receive, whatever interest you would like to receive, divided by the percentage. per, if it is per annum, then take it per annum. If this is per month, then take it per month. The rule is on the upside as well as the downside. Numerator and denominator should be in the same SI unit. If this is basically in per month form, then this has to be in per month form too. That's the rule. Right? Now, the next point. A project initially required rupees 25,000 as initial investment and it will generate a cash flow of 5,000. The payback period would be. What do you mean by payback period? Payback period is the period in which whatever money we have invested at one point of time comes back to us. It is 25,000 divided by 5,000. So it comes out to be 5 years. That is initial investments divided by our annual cash flows. This is the formula that I use. If I invested 25,000 and every year I'm getting 5,000 rupees back, so in how many years I'll get the entire money back? Right? It's gonna be 25,000 divided by 5,000. This after 5 years I'll get this money back. Payback period method is a method of capital budgeting where we try to find out in how much time we'll get our money back. So if I have to take it in a normal way, 1, 2, 3, 4 and 5, 6, maybe 6 years I'm taking up. 5,000 is being received every single year. These are called uniform cash flows. Right? So you're receiving this much amount of money every year. But once you started receiving it, among these 1, 2, 3, 4, 5, these are the 5 years in which we actually received it. But on the basis of completion of 25,000. In these 5 years, my initial investment is done. So whatever I receive after this, that would be the pure profit. Because I invested 25,000 and got this 5,000 for the remaining period, right? And nothing is told that how much time I'm receiving this money. That means I can receive this money continuously. I recovered the amount in the first 5 years. Rest whatever time is where I'm receiving this money from the project. It's a win-win situation because whatever I invested is already got. It is something that I've recovered. So the correct answer is 5 years. Which one of the following is not known an internal rate of return? What is exactly not known to you? When we are using the method of internal rate of return, initial cash flows, discount rate, terminal inflows, or the life of the project. Which of the following variable is not known in IRR? Under IRR, we'll have to calculate the discount rate. That is the only thing which is not known to us. Rest everything is known. Initial cash flows we know about. Terminal cash flows is basically terminal inflows is basically by the end of that particular time whatever we are receiving. Life of the project is also known. They want to know what discounting factor which we'll choose will give our NPV equal to 0. Right? Now, the next question. The dividend payout ratio is equal to. What do you mean by dividend payout ratio? Basically, every organization earns profit. That part of the profit which is given out as dividend is called dividend payout ratio. Then the dividend yield plus capital gains yield, dividend per share divided by earning per share, dividend per share divided by par value, dividend per share or current market price. See, if the organization is making 100 rupees as earning per share, every share is able to generate 100 rupees of income. But the point is, okay, that's his income. We cannot give the entire money to the people. Now we'll have to give a little less. Say we are giving 40 rupees to the people there. So we are giving 40% of whatever earnings the organization is making. That is called dividend payout. Whatever amount you are paying to these people. So the correct answer here would be B. That's what I just told you. This is earnings per share and this is your dividend per share. It's gonna be DPS upon EPS. what part of the total earnings is given to the people as a dividend? Okay, the operating profit refers to the profit before interest, before tax, both interest and tax, or interest or tax. What would be the correct answer? Operating profit is the profit that we earn from our business, but it is before interest as well as tax. Under operating profit, we include the cost of goods sold. We also, in the expenses, the operating expenses which are considered, that would include cost of goods sold, then selling, plus the admin expenses. Only these expenses are included. That means when we are finding this profit, it is not including anything which is relating to interest as well as tax. It's a tricky question to look forward to. Next question. This is an easier one. Net working capital means the same thing as total assets, fixed assets, gross assets, or current assets and minus current liabilities. What would be the correct answer, everyone? The correct answer is, for working capital we have CA minus CL. That means the correct answer is D. Okay, so this is where I end my session. I hope this session was useful for you, and if you like it, then kindly go ahead and share the session. And along with this, if you haven't started with your preparation, then kindly hurry up because the time is less and you have only this November period which you can use properly, because then you'll be having your examination. October is there, September is already ended, so you just have 1 month to change your fate if you haven't started with your preparation yet. Find out that particular way with which you can prepare properly, because ultimately you will have to prepare in a stronger way to clear it in this attempt only, and you don't have an option, because with the new year coming up, new syllabus, then it is going to be tougher because there would be negative marking as well. And at the same time, do not forget the fact that there will be an uncertainty. The particular syllabus is not going to be the same now. There is something new coming altogether. That means none of you has a clue that what is exactly going to be asked in the examination. So it's too risky to look forward to. Just finish it off in this particular attempt. Your basic aim should be to complete it right away. So let me show you what you can do if you're looking forward to any of the courses. Then what you can do, you can go onto our portal and look forward towards the JIB. We have got JIB, CIB Mahapack, and we have also got JIB November December bilingual as well as English. So if I look forward to the JIB bilingual, these are the regular courses which are available for PPB, AFB, and NRB. And along with this, you have also got the area of uh, this area. There we are providing you the complete video courses. These are not live, but these are recorded courses. These recorded courses will help you if you're looking forward to just getting the entire classes at one point of time only. Then you'll get this. If you're looking for the live batches are also going on. So what you can do is you can open up these classes. The timing for all the classes is also given to you, right? So you can look forward to that, and all you need to do is you can click on the area of buy now, and you can use the code Y541, and as soon as you'll apply it, you'll get a discount of 75%, 77% currently, and by going through our app you'll get a discount of additional 1%. So do not lose this opportunity to purchase our live courses at 3679.77, and also the video courses have also been launched, so you can look forward to it. Selection case study batch will be coming soon, very well, in just a few days, I would say. Thank you so much, sir. But otherwise, I'll still suggest you that give your best shot in this particular attempt only. Do not delay it. Give your best shot. That means go through the syllabus properly, go through the MCQs test series properly, go through the marathons, so that everything helps in your favor. So, thank you, everyone.